All right, there we go. So I just started up the YouTube stream as well, and we've got the GoToWebinar going as well. I see my co-host is here as well.
All right, there we go. So I just
give me just 1 second. Let me get him into today's session.
And
give me just a second. His name is John. Some of you know John. I got to find him and get him in here because John's going to be answering a lot of questions in the chat box for us. So give me just 1 second. Let me get John into the list. There we go. There we go. I think we have all of the technology set up. We've got YouTube. So in YouTube, if you could hear me, comment into the chat box there as well. So I'm going to ask you all a question. All right. So we have about a minute or so before we officially start. In fact, let me just move forward one slide here. What's the hardest part for you about investing in the market? In the chat box, just let me know. So find wherever your chat box is and type into that chat box. Fred, you're the first one in. Fred says holding winning trades. Now, I don't have a problem holding winning trades. Are you meaning, Fred, like what to do with the winning trades? How long do you hold them? I see a few people saying volatility. Catherine says that. When to sell, says Xiaoling. Timing, choppiness. Gloria says when to sell. Knowing when to buy and sell, says Charles. Trust, says Jose. Knowing what to buy. Buying at the right place. Finding my way around. Placing appropriate stops. Awesome. Yeah, it looks like you're in the right spot because the reason I wanted to make sure I learn a little bit about you. What I'm seeing here is I'm seeing a lot of common themes. Like Donald just typed in again, when to sell. So the themes that I'm seeing is I'm seeing knowing when to buy. With people like timing, says Joe, timing entries and exits. So that's when to buy and when to sell and what to buy, like how to find the stocks. So if I were to summarize it, that's what I'm just going to refer to now as the big three: when to buy, what to buy, and when to sell. We actually have today's webinar built around those categories. So you are in the right spot today, it sounds like, by reading the chats there in the chat that you have typed in. So let's officially get things started. There we go. Welcome to today's session. This session is titled The Successful Investor. As you can see there, it says a subhead, how to buy and sell stocks to consistently make 15% a year. All right. My name is Brian D'Amico. I'm really excited about today's webinar because I'm going to be showing you how you could be buying and selling stocks. Just buying and selling stocks, right? Nothing fancy. We're not going to get into in-depth technical analysis. We're not going to get into options trading. We're not going to get into any of those, some more complicated things. What we're going to do is plain old buying and selling stocks the right way. And we're going to do it in a low risk way that is not going to take a lot of time. All right. You can consistently outperform the market. Now, our target is to be averaging 15% per year. All right. There's going to be some years that will be better. Some years, like there might be a rough year that might be less. But on average, that means you're going to be doubling your money every 5 years with that target of 15%. So I'm really excited that you're here today because this information has changed my life, changed the way that I invest, changed the lives of so many people. And in fact, some of them are here today. All right. I've worked with people for several years. We'll talk more about that in just a minute. So you are in a great spot today. One of the main points that I wanted to get across here is that until you know how to take control, and make money in the stock market, you're always going to be at the mercy of outside forces. Interest rates right now are extremely low. And even though the Fed is hinting at or talking about or thinking about raising interest rates, that's probably years down the road. So we're at zero interest rates. So bonds, CDs, savings accounts, you basically get nothing there. So you're almost forced into the market. And you also don't want to be at the mercy of what the government says you get with retirement accounts or Social Security, how much you get and when you get it. You want to be the one in control. And my promise to you today is that you're going to see in this webinar how you can safely and steadily grow your portfolio each year. And you could do that without taking unnecessary risk, and you'll have confidence of knowing that you can buy and sell at the right time. One of the big things is this. This is a main theme, is your system is actually the thing that determines your success. Your system. And when I talk about a system, it's going to be a system of knowing when to buy, what to buy, and when to sell. And that's today's webinar is broken down into those three main themes. So if you're a good investor now, which I bet a bunch of you are, if you're a good investor now, what you're going to learn today will help you get better. If you're unsuccessful now, you're going to be able to turn that around and become successful. Sound good? All right. My name is Brian D'Amico. I already mentioned that a moment ago. I've been working here at VectorVest with investors and retirees for over 19 years now, coming up on 20 years. I'm actually part of a bigger team of instructors here at VectorVest to help you become successful. I am confident everything that I'm going to show you today will help you because it's helped a ton of other people just like you and just like me. Now, when people first come to us here at VectorVest, a lot of times we hear certain things, and some of you shared some of this with me in the chat box, and you could, in the chat right now, if you see something that sounds like something that you've gone through, let us know. So a lot of times we hear things like, I'm frustrated because my account's going nowhere. I feel like I'm just kind of spinning my wheels. I'm worried that I'm not going to have enough money when I retire. I might have to scale things back. And all I really want to do is consistently grow my account. I'm not looking to get 300% this year, next year. No, I just want to steadily grow, consistently grow my account and have confidence in myself that I could do the right things and be self-sufficient and be able to provide for my family. Yeah, so I'm seeing that in the chat. So I want to be able to give that to you today. So here's today's journey that we're going to take. All right, this is how the webinar is structured today. So over the last, let's say 20 years, I've seen and even made probably all the costly mistakes, and I know the things that consistently work. My goal today is to show you how to fix the things that have been going wrong for you. So we're going to look at today, number one, we're going to look at the exact criteria that you should be using to pick the right stocks. That way you don't have to be thinking, what should I be looking for? Or did I pick the right one? So that's part one. Part two is we're going to look at 3 keys so that you know that you're buying at the right time. And then we're going to look at when to sell your stocks so you can have peace of mind knowing that you're minimizing losses, and when you have losers, that those losses aren't killing you, right? That's a part of minimizing losses. And when you have profits, how to protect those profits and lock those in. Today's webinar is actually built on results. It's not just built on tests or hypothetical things. It's built on results, not just the results that we get here at VectorVest, but real people just like you. And some of them are here in today's webinar. I just saw a familiar name fly by my screen. It was Renee. And we got a bunch of people who have been working with us for years who are here on today's webinar. I'm going to be showing you what they've done to get the results they've gotten. Just very quickly, a few of the people we're going to look at today. We'll talk about Ross, right? Ross, who you'll see a common theme here. In about 6 months after he learned the system, he was making 33%. Right, so he went from haphazard and time-consuming with below-average results to where he's killing it now. We're going to be looking at Tim. We'll talk more about Tim in just a minute. We'll look at Kamel. We'll look at Carol. I mean, we've got a lot of people who we're going to be looking at exactly what they did. So turn off all your distractions right now. Right, this is now a great time to turn off those distractions. If you got them, close your door, turn off your cell phone, close your window if you need to. If you got people mowing the lawn next door, don't multitask. That's a big one. Don't have your email open. Don't have your cell phone where you're flipping through social media. just 1 hour. Let's focus for 1 hour. Give this your full attention because you will be learning something that can make a huge positive impact on the rest of your life. All right? Fabulous. All right, so very quick notes about today's webinar. It is interactive. So you got me here. I'm looking at the chat as we go. I've got my teammate John. We'll have Todd here as well. We've got a whole team here of people to help you out in this live webinar. So you can use the chat box, ask us questions in there. All right, I will ask you several questions throughout the webinar, and you'll get so much more out of it if you interact. All right, so engage with it. I will give you everything I can. We've got about an hour to get together today. Of course, there's only so much we could do in an hour. At the end, what I'll do is I'll show you how you can get more help to get your investing to the levels that we're talking about today. So if you're good with all that, give me another piece of interaction. Type another yes in the chat box that you are ready, and that'll let me know that we can jump right in to look at how to pick the right stocks. Oh, we got some fast people. Kathleen, Kobe, Richard, Amy, Andrew, Philip. Awesome. So let's do this. Let's get in there and look at how to pick the right stocks. Just because a stock might be a well-known company doesn't mean you should own it. Right? There's a right way and a wrong way to choose stocks to buy. And I want to make this statement up here at the front that there's a lot of different techniques out there that people use in the market. There's short-term trading, there's swing trading, there's day trading, there's options trading. What we're going to do here in today's webinar is we're going to focus on one of those techniques. Right? I am not saying that other techniques are wrong or bad. Right? People swing trade successfully. People use options successfully. But what we're going to do is we're going to focus on a prudent way to invest that doesn't take a lot of time and it doesn't destroy you emotionally. It's something that you could do confidently. I just wanted to get that out there just in case some of you wanted to do some heavy-duty technical analysis or swing trading. We're not going to focus on that today. We're going to focus on one technique. I want you to be like Bruce Lee. Bruce Lee said he feared the man who practiced one kick 10,000 times before he went on and learned other things. So I want you to, if you're not successful, focus on this one thing, get good at it, and then move on to some other things. So let's take a look at how to do this. Here's an example of a stock that you might think is good to buy. And after you buy it, it either goes nowhere or, worse yet, it drops right after you buy it. And you're left wondering, oh my goodness, what happened? Because you thought you did everything right, but it didn't work out. So what's the problem causing this to happen? The way I see it, there's actually three problems. Problem number one is you're buying stocks that were already going down. So what you're looking at here, this is just that same stock that I showed you a moment ago, except what I did is I just zoomed out to give you a bigger picture. Most investors have been trained to buy stocks that look like this. Because you might hear, on TV, or you had an advisor tell you something to buy a stock that looks like this. Because they'll say something that sounds like this. They'll say, buy this stock and we're going to ride it all the way back up. They'll say things, oh, it's been beaten down, things like that. So problem number one, well, first off, let me say this. Stocks that are going down typically continue to fall. A body in motion stays in motion. So problem number one might be that you've just been buying stocks that were already going down. Problem number two is you buy a stock and you're paying attention mostly to the dividend. And that's not all you're focused on, but mainly what you're focused on. My co-coach, his name is Todd Schaefer. He and I work with people every single week. We coach people every Thursday. And we hear this all the time. They'll say, oh, look at this stock. It pays such a nice dividend. Well, dividends are good. We like dividends. Getting dividends is like a nice little added bonus to get. That's how we look at it, though. It's a nice added bonus. If you focus just on the dividend, if you're buying a stock just because it pays a nice dividend and you're not looking at much anything else, you could really be setting yourself up for failure. Because what happens a lot of times is people who do that, they're letting that stock fall. Well, it starts out as 10%, 20, and then 30, and then 40, and they justify it because it pays a 3% yield. And what you're looking at here, let me just get my mouse out. What you're looking at here, this is an example of that. This stock actually paid an 11% yield at the time. And this stock ended up dropping 62% over the next few months. Here's a key point. If you keep making that trade-off where you let stocks drop 60% to get a 3 or even an 11% yield, you're never going to grow your account consistently. It's impossible. You're never going to outperform the market. Now, problem number 3 is you buy just for the company's name. And a lot of people do this. It's actually been in books too, where you buy the stocks of companies that you know about. When you got into investing, you probably didn't know everything. And that's understandable. Nobody knows everything when you first start out. But what do you end up doing? You buy the big companies like the Amazons, the Teslas, the Walmarts, the Apples, and some of them may be good companies. What you're looking at here on this screen is Windstream. I use this as an example for a few reasons. One of them was because it was my phone and internet provider when I first moved into my house. And if you're an investor, you might say, oh, that's a pretty big company. I'm going to invest in that. But here's a key point. Just because a company is well known to you or the public, it doesn't mean it's the right stock for you to own. Again, let me say that. Just because a company is well known, it doesn't mean it's the right stock for you to own right now. Right? They might be good companies, but right now might not be the good time to buy it. But the real problem is this. So we had those problems 1, 2, and 3. There's an underlying problem. The real problem is that you have no buying criteria. And when you have no buying criteria, you're always left saying to yourself, what should I look for? And when you say things like that, the downside is you get buried with data. The market has a way of burying you with data, and you're left blurry-eyed. You're spending hours upon hours sifting through all this data. And then you're still left wondering, did I pick the right one? I'm not really sure if I got the right one. Did I pick the right one? The reason I have a picture of these pineapples here is because one time my wife asked me to go buy a pineapple. And you know how Walmart's got the big bin of pineapples? Or, they might have watermelons or whatever, but it was pineapples. And I go in, I thought I picked a good one, and it was not a good one. Apparently, I said, it looks good to me, something like that. I said, this looks good. And she says, no. And she gave me a list of things. Like, I got to sniff the bottom or squeeze it or whatever. And the problem was, I thought I picked the right one, but I didn't, because I didn't have the right buying criteria to begin with. What you need to do is have the right buying criteria from the get-go, whether it be with pineapples or stocks. Because the result, when you don't have the right buying criteria, is you could end up buying stocks and then holding on to bad trades too long, because you'll start to say things like, I can't be wrong. I bought the right pineapple. I can't be wrong. This looks good. So you say the same things with your stocks. I can't be wrong. I did everything right. And then eventually you'll start saying things like, it'll come back. All right? So you need to have and use the right buying criteria. With that said, let's look at the right buying criteria. So there's 3 things that we're going to look at here. 3 criteria to use to pick your stocks. What I'm going to do here is I'll give you the criteria first. We'll look at it. We'll draw it out on the screen. I want you to write it down. And then what we will do is then we're going to get in there and look at some examples. here's the criteria. There's actually 3 pieces. That's why I draw it out as a triangle. It's got 3 sides. There's going to be an earnings component, a safety component, and a trend component. When it comes to earnings, we want earnings to be rising, and we want earnings to be positive. Sometimes you will see companies where earnings is getting less negative. So it'll look like earnings is rising, which kind of, it's getting just less negative. But I want you to start to be picky. So if you're going to be picky, pick rising earnings that are positive as well. Now, when it comes to looking for safety, you're going to look for a couple things as well. You're going to look at, start with a 1-year chart. So this is where you pull up a chart and we always start with a 1-year chart. Then we expand it out and look at 3 or 5 years to get a bigger picture. You can even go out longer as well. And by doing that, you're starting to get a feel for things like volatility, price swings. All right, we're looking for a certain pattern, which we'll talk about when we get to trend. But when it comes to safety, we're focusing more on volatility and price. But the other thing you could look for that gives you that safety feeling is that the company is undervalued. Now, this is a really nice to have one. It's not always mandatory, but if it's a tiebreaker between 2 companies and one is undervalued and the other one is overvalued, you should go with the one that's undervalued. So we're going to favor undervalued stocks. Here, I work for a company called VectorVest. We actually calculate value, so it's easy for us to say, all right, well, the price is under its value. Now, number 3 is trend. You want to look for a few things here. First, you want the price to look smooth and steady. And this and safety go hand in hand. Smooth and steady. You don't want to see a lot of volatility. We call those the sleep at night factor, and we'll look at a graph in just a minute. We also want the trend to be going up. So if I do this, you can have smooth and steady going sideways, and that's not what we want. We want it to be smooth and steady going higher. And what's a good way to know that trend is up? The definition of an uptrend is higher highs. So it would look something like this, where it doesn't go straight up, obviously. So you're going to look for higher highs, higher lows. That's the definition of uptrend. So let's do this. Let's look at a couple of examples, and then I'm going to put you to the test. This is an example, and in fact, all the examples that I'm going to show you will be 5-year charts. Just to save a little bit of time, we usually will start with a 1-year chart and then expand it out. I'm showing a 5-year chart from the get-go here, again, to save some time. What you see in the past is most likely what you will get in the future. When we first start looking at the charts, you can look at the chart and see if you just draw as best as you can, like a 45-degree line on the chart, and you're flipping through charts, you're going to favor those price charts that stay as close to that line as possible. You see how this one, it hugged the line, then dipped below, but then it actually kept the same pattern, went above it, came below it, but it hugged the line pretty good. What you want to avoid would be the stocks that kind of go like this. That doesn't allow you to sleep at night, right? Because you're going to be putting your head on your pillow wondering, oh my goodness, is today going to be one of those days? All right, so you don't want that. You want smooth and steady. You also want the stock over, like, let's say a 5-year period. If you look at over that time, if I were to break this down into, let's say, 5-year chunks, you see how each year it tends to be higher than where it started. That's not a thing that says it's definitely going to happen the next year, but it puts probability on your side. And I'm not saying we're going to hold these stocks for a year, but you're putting probability that stock is likely to move higher over time. Now, later on in this webinar, we're actually going to look at when to buy these stocks as far as entry points. Right now, we're just looking at what would be good for our shopping list of things that would that we like. But one thing that when you see stocks like this, if you were to show this stock to your buddy and you say, hey, look, this is a stock I own, you'd be proud to say that it was in your portfolio. You'd say, hey, take a look at this thing. That's the feeling you want to have when you buy these stocks, that you're really confident in it. You're proud. And one of the things that helps these stocks have those smooth, steady patterns is rising earnings. Remember, you want to make sure the company's earnings are rising and ideally positive, because earnings is the engine. You could write that down. Earnings is the engine that drives stock prices higher over time. Earlier, I said I work for a company called VectorVest, and I happen to like to use our software to graph earnings because we have just one thing, earnings per share, to look at. If you go out into things like Yahoo Finance or your broker and you look at earnings information, you could get it, but then you have to do a little bit of extra work, and I don't like to do a lot of extra work. This actually gives me the answer. This is a forecasted earnings per share. All I have to do with this is look for earnings. This is our earnings per share to be steadily climbing as well. Now, if you happen to not use VectorVest, you could go out there and look for earnings. It might take you a little bit longer, but what you want to do is look for earnings to be rising. When you have these things working together, earnings and price working together like that, it really starts to build that confidence that you picked a good stock. Now, one thing I didn't put on here is we have a way to calculate value. We actually have a line. So if it's underneath that line, that's even an extra bonus that it's under the value. Now, here's going back to Windstream. If you remember it from earlier, I said I use it for a few reasons. One was because it was my phone and internet provider. And number two was because it was a great example from somebody who came to our coaching. And you can see we've been coaching for several years now. This is back from 2015. But even though it's a historical example, I continue to use it because it actually highlights almost everything that I want to teach you in this webinar. Maybe not everything, but a lot of things in one example. So when he came to our coaching session, his name is Steve, and let me just get my laser pointer so you can see. His name is Steve, and he said, what do you think about Windstream? I bought it 2 days ago. And you can see down here, 2 days prior to the day he bought it was the last green candle. In the chat box, just give me a yes or no. Has that ever happened to you where you buy a stock and then it seems like right after you buy it, it seems like it does nothing but go down after you buy it? Amy, Brian, Michael, James, you guys are the first ones in. You're all saying yes. So you can feel what it was like for Steve. Steve came to the webinar and he's like, man, I just bought this stock 2 days ago and it's done nothing but go down. What Todd and I did, and remember, Todd and I coach our clients every Thursday, and we went through the buying criteria, the same buying criteria that you and I just looked at. So we pulled it up in a chart and we looked at this and we said, all right, Steve, let's go through our buying criteria. Price is falling. It's hitting lower highs and lower lows. Earnings, the engine, is falling. Earnings is falling. Price is over what we calculate the value to be. So it's overvalued. So we said to Steve, Steve, on the day you bought this stock, it met none of the buying criteria that we teach. Basically, you should never have bought it based on that buying criteria. Now, of course, the decision was up to Steve on what he did at that point. But right away in the chat box, we almost had no time to discuss much more. He typed this in. He said, well, I'm selling it now. And it actually ended up being a good thing that he sold it because it continued to drop about 10% in the next couple of weeks. And then this is the one that dropped over 60% in the next few months. In fact, about a year or two later, I looked back at the stock. I'm like, oh, let's see how Windstream is doing. And the company actually was bankrupt, and it was trading at about 20 cents. Imagine if he didn't sell it, and you might have done the same thing. If he didn't sell it, on each of these little upswings, you start to get so hopeful, right? You're like, oh, now this is the time. I was right before. Here it comes. And only to have your hopes crushed and then watch the stock move lower and lower. And you just get hopeful on each of these upways, and then eventually you're holding a 20-cent stock and you say, well, I might as well hold it now. The main thing I'm trying to get across here is a lot of that pain and agony can be avoided if you use the right buying criteria from the beginning. Later on, we'll talk about how to use stops once you're in a position, but let's avoid these things by using the right buying criteria. When you do, you're going to find stocks that look like this. Now, what I've done is I've pulled some stocks from, we track a paper portfolio with our clients to show how to do the system, how to implement this. And I pulled some of those trades just to show you not necessarily the ticker symbols, but that you're going to find these patterns of smooth and steady prices with rising earnings. This one for us happened to have been a 25% gain in, what was that, about 3 months? 2 months, 2.5 months. All right, so we're going to be looking for those patterns. That's what you should be doing too. And when you use the right entry and exit rules, it allows you to see gains like this. Now, here's another one. It doesn't matter the ticker symbol, but you can see smooth and steady. Even the downtrend was smooth, and then it resumed its uptrend with rising earnings. That's the engine. This one was about a month, almost 2 months again, about a 15% gain using entry and exit rules. All right. I think you probably all know Lowe's, right? This is a beautiful looking chart coming in. Rising price, rising earnings, 23% gain in a few months. The point is there's tons of stocks out there that meet this criteria. When you combine the criteria with the right entry and exit rules, you're going to be able to stack winners like this over time. And the ones that don't work out, you'll minimize your losses on. That's how you consistently grow your account each year. All right, so let's do it. I'm going to give you a handful of examples. I'm not going to give you the ticker symbols. I'm not going to show you dates. Just understand that the examples I'm showing you, it's a 5-year chart. Remember, we're not day trading here. We're not swing trading. These are typically going to be investments, right? They're going to be weeks to months, let's say. So we're going to do this. I'm going to show you a handful of charts, and all I want you to do in the chat box is just give me a yes, no, or a maybe. Would this make it into your shopping list? I wanted to start with an easy one. Oh, you guys are fast. Brian, AJ, all knows. So when you see something like this, don't even think about it twice. You just move on. How about this one? And remember, this is a 5-year chart. Right, 5-year chart, so I don't remember where the years are, but yeah, so this is, most of you are saying no's. I saw one yes and a couple of maybes, but almost everybody's saying no. Remember, this is like almost a year and a half of a downtrend. Don't get sucked in because of earnings. This is in a clear downtrend. How about this? Oh, wow. My chat box, you can't see it, but it's flooded with yeses. That's a key point, is beautiful charts will stand out to you like a beautiful scenery, a beautiful sunset. It'll be like, wow, that's beautiful. Smooth and steady, smooth rising earnings. Now, when you see things like this, this actually happened to have been a time when the entire market got hit. So you would see that a lot with a lot of stocks. The important thing is when the uptrend resumes in the market, does that stock resume its uptrend? How about this one? Yeah, Robert says, like a Mona Lisa, they should stand out. Beautiful. All right, so I see a bunch of no's. It was good for 4 years, and sometimes stocks fall out of favor. Earnings is now falling. The stock fell. It's now just kind of doing nothing. Yes, that's a no, because what do you see here? Stands out, beautiful sunset, right? You might not believe me right now, but when you flip through charts, these will stand out. You will find stocks like this. Be picky. Rising price, rising earnings. Favor those. Okay? When you use a buying criteria, would you be more or less confident in your stock picks when you're doing things like that? You can just type more or less. A bunch of people, you could type yes. A whole bunch of you are typing yes. More confident, more confident. Yes, yes, yes. More confidence is Stacy, Rob, Ryan. Exactly. A big part of being a successful investor is your confidence. And your confidence comes from a system that you believe in because you know it works. All right? Earlier I said this is built on results, and Ross was one of those people who went through the same training that you're going through. He had actually sent me an email telling me about his journey to become a successful investor. He actually said he was an experienced investor already, and he had many years of trading under his belt. You might be in the same boat. But with all those years, he had no system. He spent money on newsletters and gurus, and he was just haphazard. He was doing a little bit of this, a little bit of that, and it was time consuming. What he was prone to do was a lot of over trading, in and out, in and out, and in and out, and he never committed to a single strategy. And his results, he said, were below average. He was determined to turn things around. He took the training, the same training you're going through, even took a more in-depth training, which we call the Successful Investor course. He took that as well. What he did is he committed to one system. He ended up building a diversified portfolio where he was picking rising stocks in rising markets. He focused on safety and earnings, just like you and I were talking about here. In the 6 months after he started the Successful Investor system, his portfolio was up 33%. And he hasn't had to do a lot of trading, which was a big change for him, if you remember. He spends 15 to 30 minutes a night managing his portfolio. He ended by saying he's far more confident and relaxed because he knows what to do and when. Just like you shared with me in the chat box, that you are more confident in your picks. All right? So the first shift that you need to do, and I want you to make it right now, even if you write it down on a piece of paper, because one of my jobs is to, as your coach, is to help you make a few great decisions today. Your first is to shift from being uncertain about the stocks that you pick to where you are using buying criteria. And you're picking stocks that have a high probability of success. That's one part of your system. So make that shift to where you're using buying criteria. The way you pick your stocks is one part of your system, and it's needed to help you average 15% per year or higher. All right, so let's move on to step number 2, or part number 2. How's that? Part 2. Now that you know what stocks you want to buy, you've got to know how to buy them at the right time. Because most people have been taught the philosophy of, you just buy any time. The market always goes up. But that turned into buy and hope, because you're just buying hoping things are going to go up. Instead, you can buy at the right time and steadily grow your portfolio using the strategies we're about to talk about here. What's been tough? Whether it be over the past year, the past several years, even since January, what's been tough for a lot of people? Well, the market's been up and down. It seems like every time you might get in, then there's a sell-off, and the market seems to reverse. You start to feel like you're going through some sort of portfolio roller coaster ride. When you're not able to buy at the right time, it feels like every couple of steps forward you take 3 steps back, and your portfolio goes on this gut-wrenching roller coaster ride. And the downtrends seem to go faster and more severe than the climbs. Just like on a roller coaster, you're going click, click, click up, and then whoo, down. You're left second-guessing yourself. Should I get in? Should I get in today? Should I wait? I don't know. The holiday's coming up. Should I get in? And you're never sure what's likely to happen next. So what's the problem that's causing? Here's another thing that we talked about earlier about stocks that you buy tend to drop. Here's a few more things to think about. A few more problems. What causes that to happen? Well, one, this is the one we talked quite a bit about a moment ago. You might have just bought a bad stock. One problem for a lot of people is the stock itself. Maybe it was in a downtrend, it was volatile, the earnings were poor. It was just a bad stock. So picking a bad stock is one reason why the stock you buy goes down after you buy it. Problem number one, you're picking bad stocks. Problem number two is you just got bad advice. Maybe you weren't confident in your own ability, so you turned on the TV. There's lots of TV shows on the stock market channels, right, with their best picks and their best advice. But remember, the TV is there for entertainment, not for sound financial advice. They don't know you, right? They're there to get viewers. You might also have gotten an advisor. Now, your advisor will probably get to know you, hopefully. And I'm not saying advisors are evil, kind of like, I got this guy here, right? Your advisor probably wants good things to happen for you. But they're probably just teaching you and advising you on the same things that they've been taught over time, which is, let's just buy any time. It's always a good time to buy. Again, they don't have evil intentions. They're just giving you the advice that they've always been taught. Problem number three is maybe you think you're cursed with bad luck. There's no market gods against you. But if you feel like you have the market against you, you're going to start to do things that cause bad results. Just like with Steve earlier, he'd be like, oh man, I bought a stock and it's starting to fall. I'm going to sell it right away. And then the stock rebounds and they buy back in and then it falls again. So you start to trade way too often on emotion, all because you think you're cursed with bad luck. But the real problem isn't necessarily any one of those individual things. The real problem is bad timing. A lot of times when stocks fall after you buy them, it's because of timing. Even when the market goes up and down, we can still get in at the right time with good signals. You got to have good entry signals. That way you know whether today is a good time to get in or tomorrow. Right? When tomorrow comes, is that a good day? So you need to have a signal. So I want to give you 3 keys so that you know and feel confident that you're buying at the right time. The first one is the big one, right? The big one. The market has to be in an uptrend. I'm sure you've heard the saying, a rising tide lifts all boats. The same happens with the stock market. If you buy a stock, an individual stock, when the overall market's in an uptrend, you're increasing your likelihood for success. Because when the market's in an overall uptrend, by definition, most stocks are going higher. So your chances of picking one of those is higher. But if you continue to buy stocks when the market is falling, you're not only increasing your probability for failure, the results can be disastrous. And I include this story of Robert from back during the financial crisis. There were tons that happened then, tons that happened actually last year during the COVID drop. This is an example of what could happen, a drastic example, if you buy when the market is moving down. Rob had wrote us and he said that he had retired in 2005. That was right before the financial crisis in late 2007, 2008. And in the severest of downturns, he had an advisor who was helping him manage his money. And look what the advisor told him to do. They're like, hey, let's ride this out. And what he was doing was he would sell stocks, buy more, sell stocks, buy more, and they just kept falling and falling and falling. And he said, my retirement account ended up being down 40%. He thought he'd have to go back out and get a job. And it was all because he was buying when the market was falling. This is a really zoomed out look at the market. This is about a 20-year look at the market. And let me get my pen back out. People say, well, the market always goes up. Well, I will give you the fact that it is higher now than it was back here. Would you also agree that during that move, the market went up, then it went down for 3 years, then it went up, then it gave it all back, then it went up again. Rinse and repeat, right? So there are waves in the market. There's longer term trends, bull and bear markets, and then there's shorter term waves of the market. So what we want to do is get in the habit of only buying when the market is in an uptrend. You don't want to have the mentality of, oh, I'm going to try and nail every bottom. We don't want to try and nail the bottom. What you're going to do, and you'll see the signal that we use to help us do this, is you will wait for the market to hit bottom and wait for it to start to go higher. And then you'll start to get signals saying, hey, this market's in an uptrend. And on each of those signals, it gives you a signal saying it is okay to buy. There will come a point when the market starts to go back down. Initially, the first thing that's going to happen is you will stop getting buying signals. You know what that means? You stop buying. Right? That's key number one, is you stop buying. Then as the market, if it continues to fall, your stocks will start hitting your stops. And since you're not buying, you're getting more and more into a cash position. All right? During this COVID drop, most of the clients that we were helping were in cash about here, about a 10% drop, and then did not have to suffer the rest. Just to give you an example. So if we look at a zoomed in version, this is specifically during the last year. The market, as you can see, it went up, it went down, it went up, it went down, it went up and down and up. So you still had some waves in the market. You still only want to buy during uptrends. Some people who don't use a tool like I do, here I use VectorVest, are stuck using things like moving averages. Now, moving averages are okay. I mean, they've been around forever, where people look for a short-term moving average to be above the long-term. Sometimes they can be a little slow to react depending on the moving average that you're using. The other thing is it doesn't give you a day-over-day signal. It doesn't say, all right, today, is it good? All right, well, no, let me check tomorrow. So I like to use a signal here at VectorVest called green lights, because on any single day, it's going to give me, all right, it's green today, great. It's an okay time to buy. And you can see, don't worry about all the yellow dots. Sometimes that freaks people out. Like, what are the yellow dots? Don't get hung up on the unimportant things. The important thing would be the greens. What do you see? When the market's going up, when it's in an uptrend, you see greens. Eventually, you're going to get some last green lights, and you're going to stop buying after the last green, and you can see no greens. Look how close. You don't nail the bottom, but you're getting in near the bottom. You got greens during the uptrend. You see very little green. There's one that snuck in there during that downtrend, only because the market popped up a little bit right there. But for the most part, you got no greens. That's why we love this signal. All right, we are looking for signals saying, hey, this market is in an uptrend, and you're basically hopping on board to a moving train. The train's going, you're hopping on board. So the biggest thing is you want to buy only when the market is in an uptrend. The second thing is you want to buy when your stock is in an uptrend. We did talk about this a little bit earlier, but you want to make sure the stock is already doing what you want before you buy it. So if we take a look at individual stocks, you remember Windstream with Steve, I'm sure you do. One of the things that we talked about with Steve is we said, hey, this stock is definitely in a downtrend because it's hitting lower highs and lower lows. That was the definition of a downtrend. We even told Steve, hey, you bought it right when it was touching the trend line. A lot of times it reverses off of those. It's like an area of resistance, which we'll talk about in a minute. What you would rather do is wait for it to clearly establish an uptrend, which would be a series of higher highs and higher lows. This never started to hit higher highs. Now, here might have been a higher high than this, All right. But it never broke above that trend line. But if this stock started to hit some higher highs like this, that would have been better. There's probably some better candidates out there. All right. But you don't want to buy when a stock is in a downtrend because bad results happen. You'd rather look for stocks that are in an uptrend. So we talked earlier about higher highs, higher lows. Why is that important? Because once a stock starts hitting lower highs, lower lows, you can say, well, I'm not going to buy it right now. It was a good stock for a couple of years, but now it seems to be falling out of favor. You wait for that to end. And then once you start to see higher highs and higher lows again, you say, all right, well, now's a better time to buy it. It's got the engine behind it. All right. Now, you also want it to be moving higher on the day that you're buying it. You don't want it to be going down on the day you buy it. Now, number 3 is you want the stock to be clear of resistance. If not, there's a good chance your stock will fall right back down. This thing called support and resistance, it doesn't come in on 100% of the trades that you will do. But if you see it, you've got to know what you're seeing. We want stocks to be doing just what you see here in the picture, where they're breaking up through a ceiling. They're busting up through resistance. So like here's the ceiling. This stock was able to bust up through. If they don't bust up through, what stocks tend to do is they hit the ceiling and they start to come back down. It's like hitting your head on a ceiling. You typically fall down. I want to show you a couple of examples. This has come up a lot recently because the market has been going sideways for the most part. There's been a lot of sideways movement in the market, and a lot of stocks that you're going to see, a lot of them have been getting right back to an area of resistance that they hit earlier in the year. So here's an example. This is it. You might see some stocks looking like this now. So here's a stock. It was a good stock, rising price, looking great, right? It had a bit of a sell-off, but then it started to rebound. What do a lot of people do? Is they see it rebounding and they just buy it because they see it going up. If you're unfamiliar with the term of resistance, I want you to think about it this way. I'm going to put a line right here. Let's say that's resistance. All the people who did not sell this stock back here, a lot of them are just sitting there waiting for it to get back up to there. You've been there, right? Where you bought it, where you have a stock and it drops like 20% and you say, oh man, if it ever gets back up to there again, I'm just going to sell it. A lot of people do that. So when the stock gets back up to here again, there's just a lot of selling pressure and it puts downward pressure on the stock. What ends up happening is it can't overcome that selling pressure and those stocks tend to fall. So don't buy when stocks are near resistance. Instead, what you want to look for here at VectorVest, we actually draw support and resistance for you. We had a nice price action coming in. Stock sold off. It has rising earnings. It came up, down, and now it's right near resistance. But what you see here, it started to straddle resistance. Now, that'd be a more aggressive entry. If you want to be a little bit more prudent, you wait for a full candle above. It's like a gopher, poking a prairie dog, poking his head up through the hole. It was seeing if everything was okay, and then it comes out. It's safe. Now, the prairie dog is saying it's safe to get out of the hole and move around. When that happens, it typically continues to go higher. So I want to ask you a question. Here are 3 things that we just talked about as far as buying at the right time. What percentage of the time have you made sure to look for all 3? In the chat box, give me a percentage. If it's 100%, great. If it's anything less than 100%, then we just got to get it up to 100. So I see 0 from Nan. Donald says 0, 30%, 0, 100%. Congratulations to Hesham. 30, 20, 0, 50, 100, 0, 50, 50, 50. Yeah, so if it's anything less than 100, you got a little bit of work to do. You got to get it up to 100 where you're looking for those things each time. And if you remember, I said we would talk about Camel. one of our best students. He was just like a lot of you, though. When he first started, he had no discipline. Here's the trifecta of badness, what we would call it. He would buy falling stocks in down markets on down days and hoped they would come back. He got to the point where he questioned his ability to continue investing. He almost gave up. But he wrote and he said, I increased my confidence level. I started doing what I learned in this webinar. He also took that full course I mentioned a moment ago. He attended our weekly coaching. He would send me updates, and I loved it because he would actually take pictures with his cell phone of his computer screen. Now, here's one picture. He took a picture. He's like, hey, Brian, I'm up 22%. He took another picture. Hey, Brian, my retirement account's up 44%. So he's sending me pictures of his computer screen. And he had a nice steady climb. And he was saying his emotions are now minimal. He's not doing those stupid actions anymore. It's less stressful. It's more rewarding. And one of the cool things was that, look at this. Let me get my laser pointer back out so you can see this. He was a 52% winning trades. So you don't have to get all winners. He was having some losers, but still having success. All of that is possible when you're using the right system. Remember, the system determines your success. It'll allow you to make the second shift, which we're talking about today, which is to go from a portfolio roller coaster to where you're using entry signals and you can buy at the right time. Buying at the right time, that's the way that you're going to be able to start to average 15% a year, get consistent growth in your portfolio. All right. So wherever you are, kind of sit up straight. If you're sitting down, kind of straighten out your back, because we're going to take a look at how to know when to sell. Now that you know the stocks that you want to buy and when to buy them, the most important thing to know is how to know when to sell them, right? This is the thing that most investors have the most trouble with, because they'll think they did everything right. Find a stock that's going up. They're like, oh, Brian talked about resistance. I want to wait for it to poke above like a prairie dog out of the resistance. They have a winner, but then they say, oh, I don't know when to sell it. And it turns into a loser. Sometimes the result of those is big losses, and they eventually say, oh, I might as well hold it now. Kind of the big thing is, when you have big losses, it's so hard to recover from them. When you have these big losses, if you, let's say you lose 50%, you've got to gain 100% to get back to break even. This is where Kamel was. Remember he said he started to feel like a failure? The key thing is you got to know your exits right from the beginning. Just like on a plane. Before the plane even moves, they say how to get off the plane. Whether there's an emergency or whether they land safely and things go right. You want to do the same thing with your stocks. You want to know how to get out of the trade if things go against you, and you want to know what to do if it goes right. In the time that we've got today, let me give you 2 things to look for that I think will help you immediately. We have a full course called The Successful Investor, where we go through all the nooks and crannies of things that of all different things to look at. We have all the selling rules built into that. I want to give you the 2 big ones. Number 1, set your line in the sand. And if the stock hits it, you get out. No questions asked. Well, I'm going to show you how we do that in just a minute. But number 1 is set your line in the sand. Number 2, one of our 4 rules that we teach in the full course to help you lock in your profits is to never give back more than half your gains. Let's take a look at these 2 by using a couple of examples. Here's one from our portfolio that we did. It was UVE. The stock looked great. Price was going up. Went flat, then broke above resistance, right? Earnings was rising. It looked great. We were pretty excited about it. So what we did is we set our line in the sand from the beginning of the trade. Some people see this as they say, oh, this is an area of support. I'm going to set my line in the sand below that. We like to use, here at VectorVest, we call it the VectorVest stop price, which is based on a 13-week moving average, but we adjust it for the company's fundamentals. It's a nice prudent stop to use. That's the one that we use. Again, it's a 13-week moving average, but tweaked a little bit for the company's fundamentals. So wherever you set your line in the sand, here's the key thing is you want to give the stock enough room to breathe. Some people just blindly just choose a 10% trailing stop or an 8% trailing stop, and they end up putting their trailing stop right in the middle of all this junk. And when the stock hits it, they're like, "Oh man, I had another loser. Why'd I get out?" Well, the reason is because you set your stop right in the middle of all that junk in the normal trading range. Give it some room to breathe. So we set our line in the sand. We knew our entry was going to be right above here, so that was our entry. Then after we entered, a couple days it went up, but then it started to go against us. Did we freak out? No, because we had a line in the sand. When you have rules in place, you could do this unemotionally. You can see here when it hit our stop intraday, it hit our stop, we lost about 10% on the trade. A 10% loss is a lot better than if you didn't sell it and the stock went from around 45-ish down to 25. Having that line in the sand will protect you from suffering those large losses. Here's another one. This is IIN. It doesn't matter the ticker symbol. It's one we actually traded a couple of times. Here is our entry. I want to give you an idea of locking in profits. We got in. This thing basically went straight up after we bought it. And if I get my pen back out, you can see we sold it at a 17% gain here. That must mean we, at one point, were up over 34, around 35%. It pulled back, hit our we call it the give back half rule. We gave back half of our gains. And that usually starts when you're up about 10% on a trade. You start to implement that. And then, what happened? Poop. It rebounded and went right back up. And people start to say, well, you should never have sold it. You should have stayed in. Well, we eventually got back in here. The market was still going up. We found it as another candidate. We got back in. Sold it at almost a 9% gain, which must have meant we were up at one point up here about 18%. And it pulled back. We sold it. And then some people were telling us, well, don't sell it. Stay in it. It'll come back just like it did before. Well, what if it didn't? Right? This stock went then from 70 down to 20. You got to lock in those gains. So knowing when to sell allows you to lock in those gains and minimize losses. Right? And that's one of the big things that Tim learned. Tim, he went from buying and holding stocks as long as he could, and he would never know when to sell them. And he held stocks too long. He felt he was just trading in the dark. Right? He was on pace to make 30% 6 months after he started implementing what you and I are talking about here. And he actually also took the full course that I was talking about earlier. He sets his stops once a week. That's because he gives them enough room to breathe and he is confident in his picks. He said he has a better ability to know what's happening in the overall market and he can sleep better. One thing you should ask yourself right now is, and in the chat box, let me know, do you know when you would sell your stocks? Let's say you have 10 stocks in your portfolio right now. Do you know exactly when you would sell all 10 of them? Do you have a stop in place for every single one of them? If the answer is no, now I see a lot of no's. I see some yeses coming in, so congratulations if you say yes. Then the key is, if you say yes, is your stop at the right point? But we don't have time to get into all that today. If you're saying a no here, we got to help make the shift to where you don't know when to sell to where you do know when to sell. And we were able to look at two big things today. Right, you got to make the shift from not knowing when to sell and suffering large losses to where you know when to sell. You can choose to place trades without knowing when to sell, which leads to trading in the dark, maybe be a deer in the headlights, or you can set the trade up the right way from the beginning and know where to set your stop so you minimize losses and maximize gains. I mean, that's critical. To be a successful investor, your system must include rules that detail when to sell. That's how you're going to be able to consistently outperform the market. And remember, your system determines your success. So let me give you a checklist right now. I'm going to go through it quickly. You don't have to write down all the things. You can highlight some of the things, but it's mainly for you to check to see if you have everything on here. Does your market signal reliably tell you the market's in an uptrend? Just give yourself a check. As we go through these, give yourself you can give yourself a smiley face or an X. How about that? Are you finding safe stocks rising price with rising earnings? Consistently. Is that what you're doing? Number 3, how long does it take you? So if it takes you too long, then that would be an X. Do you know how to use stop prices? Right? If there's any point where you're kind of like a deer in the headlights, then that's an X. Are your stops helping you to protect profits and minimize losses? So grade yourself. What did you just learn? Out of those things that we just looked at, 5 things, what did you just learn about your system? You can say, all right, I got 5 smileys, 2 checks. All right, so you can, if you did checks, that's fine. So Steven says I got 2 checks. Donald says I'm 0 for 5. If it's anything less than 5 check marks, then it needs a little bit of work, right? Wouldn't you agree? Amy just says, hey, it needs improvement. Exactly. Those are the parts of your system. You got to go from no system to where you have a system. Like Rick. Rick is another one of our students who learned the full successful investor system. At the time he was retired. He had just retired. And prior to learning the system, he invested on his own, but he said he lost almost every time. He didn't know what to buy, or when to sell. Basically, he didn't have a system. He said he tried mutual funds, but ended up right back where he started. He was tired of hoping and having no control. As an investor, he said, I felt helpless and hopeless. After taking the training and making the shift that we talked about to using a system, he's now an investor who's in control and confident. He actually saw his portfolio increase about 11.5% in the first month after he learned the system. So, as you've seen today, without the right system, you've probably been buying stocks that you thought were good stocks, like a good pineapple, only to see them drop. You might be feeling like you're trading in the dark. You don't know which stocks are good. You don't know when to buy them, and you don't know when to sell them. You feel like your account's going nowhere, like you're just spinning your wheels. Or you're just not growing your account fast enough. Today, we outlined the basics of a system that you can use. And when you have that system working for you, you'll know exactly when is the right time to buy, what stocks you'll buy, and when to sell them. That way you start to feel confident in yourself and you have the ability to be self-sufficient, and you'll know you're able to live, that comfortable life and provide for the people you love. The obvious question that you have right now is probably, what do I do next? What's the best way to install this type of system in my portfolio? And the way I see it is you have a choice. You have option number 1, which is you try it on your own. You can learn by trial and error, and you might be in the same place this time next year. Maybe not getting the results that you want financially or emotionally. Or option number 2, which I think is the better choice, you want 100% commit to learning the system to become a successful, confident investor this year and begin to consistently grow your account. Robert just typed in, he's like, yes, option number 2 is definitely better. If you're ready, then I highly recommend the full system that we put together, which I've mentioned a few times today. We have a full course. It's called The Successful Investor, 6 Weeks to Steady Growth. It's designed to take you step by step through the system that you need to safely and steadily grow your portfolio each year. And the outcome that you get from this course is a complete A to Z system, which shows you how to grow your account and consistently average 15% per year or more. Here at VectorVest, we actually have a thing called a Quick Start course, which a lot of you might have gone through. It's right in the software. This course is different than the Quick Start course. It dives deep on all the topics. I want to say this, though. Before we get to that, I want to say one thing. The course is only for dedicated people who take their investing seriously and are willing to put time in to learn the system. If you are not serious about it, right? If you're not serious, if you're not committed, if you're just looking for some sort of magic pill where you're going to become a millionaire tomorrow, it is totally not for you. We respect your time and your money and only want to work with people who take it as seriously as we do. By learning the system, all right, you'd be able to have more money, more time, more freedom, right? Now, the easiest way to explain the course is I just want to map it out for you. I want you to get a full understanding of what's in the course and what it's going to give you. All right, so in Module 1, we start out with the strategic game plan. The outcome you get from Module 1 is clear. You become clear on your goals and objectives. You'll know what type of investor you've been and how to course correct. Module number 2 is all about getting into the market at the right time. This is important because the market can be frustrating if you don't know what you're doing. And if you get in at the wrong time, it can be tough and time-consuming to make back losses. The outcome here is you're going to be able to understand and recognize what the market is doing at any point in time. You'll always know whether it's safe to buy and enter the market. You'll know when it is that safe to get in. Now, we're not just going to be saying, hey, green lights are good. We're going to be talking about phases of the market, the different phases that the market goes through in its cycle. There's more to it than just green lights. Now, Module 3 goes really deep on what to buy. This is important because a lot of people waste hours of their lives digging around looking for trades. And when they're done, they still wonder if they made the right decision. The outcome here is you'll know how to quickly find and identify the best stocks for your trades. Module 4, it's all about knowing when to sell. I told you today I could only talk about 2 of the multiple criteria of knowing when to sell. Knowing when to sell is important because selling too early or too late can be utterly demoralizing and devastate you financially. The outcome from Module 4 is you're going to know exactly when to sell a stock to minimize losses. You're going to know, hey, if the stock is going for me, what do I do? If it's going against me, what do I do? We're going to show you. It's all rules-based. In Module 5, it's all about setting up the trades and setting up your portfolio. This is important because a lot of people go out there and they buy a stock without putting any thought into that. So you got to know how to diversify. You're going to know how to position size. The outcome here is you're going to know exactly how to set up your trade to maximize your success. And then in Module 6, it's time to put it all into action. We're going to give you an easy-to-follow daily ritual, a simple checklist to follow so you don't miss a step. And the outcome you get from this module is complete confidence and peace of mind because you're going to know you'll be able to implement the entire system. By the time we're done, you're going to have that system that we talked about to get steady, consistent gains each year. All right, now, before I tell you how to get into the course, I want to let you know it is 100% money-back guarantee. We believe beyond a shadow of a doubt that this course will get you results. We offer a 100% money-back guarantee. If you don't feel like your investment in this course will be returned to you many times over while feeling so much more confident in your ability to buy and sell stocks, just show us you've put in the work. We'll gladly give you a full refund. We know if you do the work, you're going to see the results. All right, so you have no risk taking this course. Let me tell you about a couple of quick bonuses that you get. There's a couple of bonus modules. The first is how to protect and profit in down markets. Some of you in the chat box were asking about what to do when the market's in a downtrend or you get those red lights. The first thing that we're going to teach is the 4 signs to become defensive. We're going to teach you how to insure your portfolio against large losses and how to profit in those down markets. Then this next bonus is what Kamel has started to do now, and he started to automate his system. So we're going to get into how to automate the system that you learn in the course. In addition to these 2 bonus modules, we want to help you get the best results fast. And to do that, if you don't have access to VectorVest, so any of you in this webinar, if you do not have access to VectorVest right now, we're going to give you 60 days of access to it. It's like a little trial to the software, so you can test it out and see if you like it. And then after the 60 days, if you want to keep it, great. If not, it's going to be sad, but that's your choice. but we wanted to let you at least test drive it during the next 2 months. Also, by registering today, you'll get 60 days of access to one of our top-end tools called RoboTrader. I didn't have time to really get into showing you what this is, but just know it's one of our top-end portfolio management tools. You'll get access to that. So if you're a VectorVest subscriber or not, if you don't have access to it, we'll give you access to that. Plus, I mentioned how Todd and I do coaching every Thursdays. We're going to invite you to those as well. These are designed to help you actually implement the things you learn in the course. It's what, remember Rick from earlier? These implementation sessions will help you be like Rick, where you can actually start to implement the things that we're teaching you in the course. Because you want to start to get results right away. So Todd and I are going to be there to guide you through the entire process. During those sessions, you'll be able to see the paper portfolio that we track. You'll be able to see the stocks that we're in, how we're managing them, so you can actually see people implementing the system. And it's a really huge bonus. It's going to allow you to basically trade over our shoulder each week as we implement the system. As a recap, the total value is over $1,900. You get all these things, the full course, the masteries, all those things. You might be saying, all right, well, what does it cost? Well, is it, $1,900? Is it $1,000? Is it $500? Well, the truth is, we probably should charge those. It's that good, and the results that it can create for you are life-changing. We've seen how this course has done that for so many people already, but we want you to be able to enroll today and start getting results right away. Is it worth those prices? Definitely. Honestly, we actually sell this course throughout the year for $495, but not today. Today, the price is only $295 for everything we just talked about today. Plus, if you're on today's webinar, I'm actually going to give you a special discount if you order before the end of the webinar. So there's going to be even lower than $295. So you're going to get the course, the live coachings, the software, the bonus modules, access to our portfolio, all for $295. But you need to take advantage of this and these bonuses while you can, because they will go away. To get yourself registered, go to VectorVest.com/TSIC. We're going to put that link into the chat box for you. All you have to do is click on that link, VectorVest.com/TSIC. Now, if you've taken this course before, pardon me, if you've taken this course before and you want to take it again, you just want a refresher and go through it live with us, it's only $95 actually. And you could do it all over again. Just call our office to get that refresher rate. I like to reward those of you who take immediate action, though. If you know this is right for you and you order now before the webinar ends, we'll give you an extra $50 off. So instead of paying $295, you can get it for just $245. The $245 price is even lower than our elite pricing for this course. It's the lowest possible price we would sell this course for, unless you've already taken it, which I mentioned a moment ago. That means you get the full course, the 1 year of access to the course, the live mastery sessions, access to the software, the bonus modules. The $245 price will be only for those who register before we finish up today's webinar, which is probably about 15 minutes from now. Again, to order, go to VectorVest.com/TSIC and then just click on the button there to register. After taking this course, I hope you're going to be able to send in comments like this, because we asked people who have taken this course to tell you, people who are thinking about taking the course, we asked them to tell you what they felt about the course. John said, hey, this course, it'll help you make better trades, reduce your losses, and earn more profits with less time. Lucine says, just do it. The benefits are unbelievable on so many levels, financially, emotionally, and psychologically. Richie says, I've taken several other investment courses, and this one is among the easiest to implement and stay on track. Robert says, it's an excellent course, well worth the money you will spend, and likely earn enough in your first trades to pay for the course. And Danny says, take the course, follow what it tells you. You will not regret it if you are serious about being successful. I want you to think about this. What was your percentage gain over the last 12 months? Well, what's it been over the last 6 months? Or maybe think, what did you lose? Maybe not over the past 12 months, but what have you been averaging each year? Have you just been getting back to where you were a year ago? What's been your average? Here's a thing. Are you where you want to be? A key question is, if not, do you have a plan to get there? If you don't, ask yourself what it would cost you not to do this. How much money will you lose in the market? If you keep doing the same thing, you're going to get the same results. Then ask yourself how your life would be different if you do this and it works. What if it works? How would your life be different? Remember, there's no risk to you because there's a 100% money back guarantee. You can go through the entire course. And if you don't like it for some reason, number one, we'd be shocked. But number two, we would give you a 100% money back guarantee. Give you all your money back. Remember, if you order before the webinar is over, you get an additional discount. The price is lower than our elite price for the course. It's only $245, but you need to order before we wrap up today. Now, I'm about to begin some Q&A. We'll go through some questions and answers with you. Before I do, in the chat box, if you know that this is right for you and you're ready to join me and join Todd in this course, then in the chat box, type 2 words. Just type, I'm in. 2 words, I'm in. I see Robert in the chat box. He's like, sweet. Oh, yeah. And Richard says, I'm in. Amy, I'm in. Robert R., Roger F., say, I'm in, I'm in. Ann P., Michael, Nan, Donald, all say, I'm in. Peter says, is it going to be available to review with on-demand sessions? He says, do I get to see it? Yes, you can. You have full access to everything for a full year. Robert says, I'm filling out the online form now. Awesome. While you guys are saying I'm in a moment, I'll tell you exactly what to expect. But Todd and I, we are so excited. We look forward to teaching this course every year because we know that it transforms lives. As one of the people said earlier, it's not just financially. That's one thing to make money, right? But so many of the people that we talk to, so many people say they have a shift emotionally as well. Psychologically, it's almost as if they become a different person. They're so much more confident and in control. And when you feel that way about your investing, it spills over into the other things that you do. And if you remember Rick from earlier, I asked him, I said, hey, Rick, how do you think this might change your life in the future? He said, it already has changed my life. He's like, forget about the future. It's changed my life already because he was moving across country and he was buying a house. And he said it allowed him to buy a little bit bigger of a house than he originally planned. All right. Now, if you've already taken the course, you can get it for $95 as a refresher. You can just call or email our team and they could help you out. A couple of the common questions that we get. So I wanted to cover a couple of the common questions that we get. One concern might be I don't have a lot of time to do this. My schedule is pretty tight. Or I don't know if I could do this myself. I'm used to having other people do a lot of the work for me. Well, if you remember Carol from earlier, she came to us and she said she had no time to manage her investments. She was still working. She was trying to juggle work and manage her father's estate because he had just passed away. She was paying a money manager but was frustrated because the money manager was only making 1% per year during bull market season, right, for 4 years. She was really fearful of doing things wrong and doing it on her own. And she was fearful of losing money. After taking the course and implementing the system, she said she is no longer afraid. She had 60% winning trades, which was actually better than Kamel, and she's been outperforming the money manager by 8 times. Not only has she had great financial results, but she has so much confidence. She continues to come to our coaching sessions each week. All right. She is highly involved in everything that we do, and her confidence level has increased tremendously. So again, if you order before the end of today's webinar, you get that additional $50 off the course. You get the course for the lowest possible rate. Now, if you wait until the end of the webinar, when we're all done, the price will go back up to $295. That reduced price of $295 and all those mastery, those live masteries and those bonus sessions that I talked about, those would go away, right? So if you register prior to Tuesday at 5 p.m., Tuesday at 5 p.m., the price goes up, back up to $495, and some of those bonuses go away. So go to VectorVest.com/TSIC. Get yourself registered now before registration closes. Again, if you're in, and I have not called out your name in the chat box, all you have to do is type in "I'm in." That would be fantastic. That way I could welcome you. Let me just go back to my little chat box here. Some of them have flown off my screen. I'm glad I've got Todd and John answering in the chat box here. So what I'm going to do is, if you have a question in the chat box, let me know. That way I could help you out. Bill says, "I'm in." You King, one of our you're a student from, what was it, the last round, right? You King, he's just typed into the chat box, "It's a great course." So thank you for being here again. Andrew says, "Great, thanks very much." I will actually, Carlos, great question. Carlos wants to know the schedule of the course. Now, by the way, the schedule, you do not have to attend the live sessions, but I will show you the schedule. There we go. If you choose to attend the live sessions, now these are called mastery sessions. So we won't teach the material, the module all over again. What we do is we help you implement what was taught in the recorded module. So if I get my laser pointer out here, you can see they start July 14th, and it's every Wednesday for 6 Wednesdays. Those are our mastery sessions, and they are for you as a student only. Only students in this course will be invited to those. You will also be invited to our coaching sessions on Thursdays. Those, I don't have a calendar showing those, but just know we have 2 live sessions a week. Now, the Thursday coaching is for all of our coaching clients. We'll let you sneak into those as well. You can kind of be like a fly on the wall and kind of see what it's like to go through the coaching of the system on a weekly basis. That's where people are implementing the system week by week by week. They've already gone through the training, so they're getting help every week. So that session is at noon on Thursdays. We'll invite you to those. If you can't make it, you can listen to some of those recordings. The mastery sessions are at 4:30 Eastern. That's just a time we get the best attendance. We know it's not everybody can make it at 4:30, but we found we get the best attendance at that time. All right. Looking down at my chat box, I see several people. If you're having trouble with the order form, it should just, let me just pull up my web browser here. It should look like this. All right. So if you just go to www.vectorvest.com/TSIC, it'll bring you to a page that looks like this. And you should just have a button that says Purchase Course Now. And then when you purchase the course now, if you're brand new to VectorVest, it'll probably walk you through creating an account, like proceed to checkout. And if you're brand new to VectorVest and you do not have an account, you fill in all these things down here. If you are already a member of VectorVest and you have a username and password, click the sign in button. Right, that's a key thing. Click sign in. That way it knows who you are. All right. Chet says, "I just purchased." Keith, "I'm in." Kobe says, "I registered." Christine is in. Donald says, "I'm in." I'm scrolling off my screen here. Charles says, "I'd like to be in." We'd love to have you in, Charles. Let us know if you have a question. Roy says, "I'm in." Osvaldo says, I'm almost in. Rose says, I'm in. Those of you who are in, welcome. Welcome to the class. I'd like to welcome you to the session. Welcome you to the course, I should say. You should be getting an email from us with all the details, with all the dates of the live sessions, with the directions on how to get into the course. Print that out, that way you have it, and you can start marking things down on your calendar. Okay? All right. Hold on, I'm scrolling down. All right. Ann says, I just registered. Nan says, I purchased. All right. Now, some of you are working in the chat box. You're typing in questions for John, and John and Todd are trying to help you out placing the order. That is great. Douglas says, what is the price for elite members? Elite members, the price for elite members is $247.50. So the price right now is actually lower than that. It's $245. So if you register now, it's actually a couple dollars lower. Tuesday at 4 p.m., the price will go back up to $495. If you are an elite member, you could always get it for $247.50. Now, if you, I see a couple of you are saying that maybe the web browser is not working when you're placing the order. I would recommend a couple of things. Try a different web browser. I've got, let's say, Firefox installed. Let me see if I can pull that up. So if you pull up Firefox, just try a different browser. Just go to www.vectorvest.com/TSIC. Whoops, not that one. Let's see, www.vectorvest.com/TSIC. And hit enter. Sorry, it's off my screen. And you can see there it is there. Purchase course now. And you should go through the same thing. If something's not working, and it seems to be working on my end, if it's not working for you, just call our office. All right, if you call our office, let me put the phone number up. I'm trying to get my pen back out. There we go. If you call, there we go, 888. This is our U.S. and our North America number, 658-7638. And that'll get you to our friendly support team. This is another great point to make, is that our support team is there for you as well. It's not just me and Todd here running a small business out of our garage. We've got an entire company, a worldwide company, and we've got a team here in the United States located in North Carolina. When you call, you will speak to a human, and they will help you out. Of course, our office would need to be open. If you call after hours, you could probably leave a voicemail. You get to talk to a real human who knows the software, knows the system, can help you out, and they're very friendly and helpful. All right. And if you call, if you're having trouble with the pricing, I think Robert says, will they be able to honor the price? Yep. Just give a call and just say, hey, I'm having trouble with the website placing the order. And on the webinar, Brian mentioned a discounted rate. Just let them know. They'll help you out. The best thing would be to call now. I can understand if you call now, sometimes the phones are a little bit busy right after a webinar. You could just hang tight if you're on hold. All right, what I'm going to do is I'm going to put a little flag on my screen because I bet some of the questions flew off my screen. So if I missed your question, I don't want you to think that I forgot about you. I'm going to ask that you copy and paste your question back into the chat box right now, and I will answer it. Or my team will. But I'm doing this now so that I can answer it. Copy and paste it into the chat. I don't want you to think that I ignored you. So just type in your question now, and I will help you out. Let me just grab a quick drink while you do that. Now, if there's no questions, that you know what that means. That means that we'll wrap things up earlier, or that we just did a great job of answering questions during the webinar. Chet says, what is elite membership? Chet, great question. Elite membership is that you are a subscriber to VectorVest. I mentioned that a few times, that I work for a company called VectorVest. That's who's running the webinar today. If you've been a subscriber to VectorVest for 5 years consecutively, or you've spent, I believe it's like $5,000 or so, something like that. I believe it's $5,000 over the period of your lifetime with us. Even if you spent all that in 1 year, you immediately become an elite member. All right. So remember, go to vectorvest.com/TSIC. The special price goes away Tuesday at 5 p.m. That's when registration closes, and that's when bonuses go away, the price goes up, and then you have to wait. Or you can buy the self-study version at the higher price without all the bonuses. Douglas says, would you please put up that calendar again? Yes. So here's our calendar. And you can see these are all the Wednesday mastery sessions that are on the calendar. All the Wednesday sessions where we meet at 4:30. That's where it's specific to you as a student. And we go module by module saying, all right, on the 14th, we're going to talk about module 1 today. What did you have questions about? Where did you need help? Let's go through the homework assignment. All right. Then module 2, module 3, and so on. Plus, on the Thursdays, you'll be invited to those. Those are coaching sessions that we hold. Unfortunately, we won't be able to celebrate my birthday on the 24th, the week after class ends. You could just send me a huge gift basket. Just kidding. So Douglas, that's the calendar. Richard says, I finally got in. Awesome, Richard. And Richard, yes, the times that I just showed there are Eastern time. Eastern time. Let me see if I could do something really quick. Let me pull this up. Let me try and log in. I want to show you the course. Give me just a few moments. I got to log in. Robert says, I'm on a call with the support team now. Awesome. So this is when I logged into our VectorVest University. Now you can see I've got access to like all of the courses that VectorVest offers throughout history. And I completed the Successful Investor course, but I'm going to click on the Successful Investor course and you can see how it's laid out. Hopefully you could see that on your screen. You can see that there's a video. That's just a welcome. Then when you get to module 1, you can see we got the official presentation. Then you get the recording of our mastery sessions. We put together a video showing you how to do the homework and a test to test your knowledge. And you'll see that's very similar to all the other modules. All right, then there's module 3 and so on down the line. And you can see here's the bonus. You have access to the bonuses right away. There's the 2 bonuses. Here we give you access to all of the bonus. These are the sessions that we do on Thursdays. So we'll give you recordings of all the Thursday coaching sessions that we do. Right? We call them our Successful Investing Group coaching sessions. Those are there. These are the ones from when the last class went through. And we actually put together some international mastery sessions. So if you happen to live in the UK or Australia or Canada, we had our managing directors do a mastery session just for you. All right. Let me look back over at the chat box, see if any questions came in before we wrap things up. Donald says, I'm all signed in, and I've put my dates and times in my calendar. I can't wait to get started. Thank you for typing that in, Donald. That's awesome to read. We can't wait to see you there. Todd and I will be doing those sessions. The live sessions start on July 14th during that week. All right. Well, it looks like the questions have dried up a little bit. If you're on the fence, we hope you pick a side. If you feel it's not for you, maybe it isn't for you. Maybe you're in a different spot of your investing right now. But after going through today's session, you should kind of see if you're like Kamel was, if you're like Rick was, if you're like Carol, if you struggled with any of the things we talked about today, this course will definitely help you become a successful investor. Go to VectorVest.com/TSIC. We look forward to having you in class. We're excited about it, and we can't wait to see you there. All right? Have a great rest of your night, and we'll talk to you.